All right, we're live on YouTube, live on Instagram. Thanks for joining. We're gonna do a live stream of Martinis with Scott on the YouTube channel, Instagram. We're just gonna listen in if you'd like to. Hey Zoe, thanks for joining. If you're listening to this after it's recorded, just skip ahead 30 seconds while we wait for people to join us. All right, let's get rolling here. Hey, thanks for the happy face, Zoe. I like that. All right, welcome everybody to Martinis with Scott, episode 173. Oh, what a week. What a week. Big news. Big news. So I can't give you the details of this yet, but I've been teasing big news for probably 2 months now. It feels like forever. I have been working to save the jobs in this company that I'm sitting in right now for feels like a year and a quarter, let's say 15 months. And this evening, just right now or this afternoon, we got everything signed off. Money's being transferred in the morning for the acquisition of this company. So tomorrow, Sinclair Range will own this, and I'll give you some details on it. So we did what's called in the M&A business a paper closing today, which means you sign all the documents, the lawyers hold it all, and it sits in escrow, and then it's released when funds are transferred. In Canada, where I'm sitting, it's a bank holiday today, so it couldn't physically be done today, but we're finished, and that's pretty exciting. You know, I was thinking today that one of the reasons that people who are active in industry why don't they do these shows? Why don't they get on social media, provide more content, provide more value added, build their brand? And one of the reasons, I think there are two reasons. One is, obviously there's people active in business that do that, but that's because this is a job for them. It's an income stream for them. As opposed to me, I make my money doing other things, and I try to add some value for you that will help you in your business, in your journey, in your life. And so I'm not trying to make any money off this. I'm just trying to add some value for you as a listener. And thank you for listening, by the way. And I think one of the reasons that someone who's active in their career in doing deals that they can't do this sort of show is because, well, twofold. One is the lawyers tell them not to, right? Because you don't want to say something in the middle of a transaction that may cause you problems in that transaction. I'm a little superstitious. I don't want to jinx the deal either. But certainly, when I'm in the middle of a transaction, when we're trying to turn around a company, what I like to do is just kind of go quiet as much as possible. And the second thing is, deals are so mind intensive. They just consume you, and you just don't have the mind space for anything else. So we skipped the Martinis with Scott show last week. I didn't have a drink with you. And today I didn't even know if I was going to make it, but I didn't want to go 2 weeks without getting you some content and saying hello. And by the way, I don't have anything to drink with you today, but hopefully you guys are having a Thursday afternoon drink. I can assure you tonight I will be sitting by myself at a bar in Sherbrooke, Quebec, and drinking a bottle of champagne and having a wonderful meal. That's my plan for the evening. It's too bad that you guys can't join me. Anyways, enough about that. Last show that was released was an interview with a Canadian politician by the name of Maxime Bernier, the leader of the People's Party of Canada. Feels like a year ago now. I think that was probably 2.5 weeks ago, something like that. This show is not about politics. We don't talk politics on this show. I'm not taking a position on who should be leader. I'm not trying to influence you in any way, persuade you in any way whatsoever. But we had Maxime Bernier, the leader of the PPC, on the show in the middle of an election campaign because I wanted to talk about leadership. And this is a show about leadership. It's a show about winning momentum in life and in business. I always tell you that. And during the election campaign, Maxime was having huge crowds out. Just huge crowds out in a rally fashion, and was the only person running in Canada for the federal leader that was against vaccine passports. And so everybody else was into vaccine passports. Again, I'm not trying to tell you vaccine passports are good or bad. That's not what it's about. What it's about was the leadership characteristics and the momentum, the winning momentum that Maxime was gaining. So you don't have to go back and watch the interview. You don't have to be into the politics. But what did we learn from this discussion with Maxime? One of the things Maxime talks about all the time is he may never be elected. He may never be elected in his seat. He may be never elected as prime minister, but he has values. And he has 4 principles that he founded the party on. This is not me. You can go read the website. They are freedom, responsibility, fairness, and respect. Freedom, responsibility, fairness, and respect. And one of the reasons I wanted to talk to Maxime was to get a feel for who he really is. I already know who he really is, but to give the audience a feel for who he really is and the values, sort of aside from the branding that he has received from the other parties, from the media, and also from his, I think, sometimes ill-advised social media posts, which are just kind of over the top sometimes. And so I wanted to show a different side of this, but mostly what I wanted to do was talk about leadership and the role of values in leadership. And it was quite fascinating. But here's the short form takeaways that I think that we should, we on the Martinis with Scott channel should remember, is that values are hugely persuasive. They're the way to build a team and to be successful. They're a way to run your life. And here's, they're hugely persuasive, especially when you're in an environment where the other people don't have any values. Okay. And I'm not trying to say that the other political parties in Canada are valueless. I'm saying that they change their values every day depending on the polls. And that's not a value. Right? They're just kind of populist and leading to where they think they can get the most bang for the buck that particular point in time as you move across time. And that's not the same as having, hardcore values that you believe in. And values are persuasive. Okay. Doesn't mean you have to agree with them, but they're persuasive and they're contagious. And so we have values at my companies that I own, that I buy. So, for example, I've talked to you before about my primary HR policy, my primary human resource value, which is no assholes. I don't want any assholes working for me, right? And so just be a good person. That's job number 1. And I talked to one of my general managers this morning, I won't name which one, about why. He told me a story about an employee and what was happening and why they were pussyfooting around. I don't know if that's clean, pussyfooting around this person and not making decisions. Why is he still working for us? Why is this guy still working for us? I didn't want to let him go because I was worried about this liability. Number 1, no assholes. That's job number 1. That's a value. You need to be held accountable to that value. This company that I'm sitting in right now, I was asked this morning, and every day that I talk to them, I talk about the 4 values. They ask me, what is my vision? You're buying this company. It's been in serious financial trouble. What is your vision for this business? I don't have a vision. That's my answer. I reject the entire question. Okay. You don't operate and affect change based on some new written vision, some new written business plan. That's all bullshit. What you do is you focus on today and you focus on your values. And the 4 values that I've talked about here are teamwork. Okay. That's number 1, teamwork, integrity. And by integrity, we're talking openness and honesty, a value of perfect deliveries and perfect quality. We may never obtain perfect deliveries. We may never obtain perfect quality in the products that we are shipping. Okay, but those are values. Those are values that we want to head towards. And if we do that, everything's going to be awesome. So there's an example of how values can be used and how they're really persuasive, because everybody just loves that message. And one of the reasons everybody loves that message is because prior ownership did not have those values. They had probably quite the opposite values. I'm not trying to slag those guys, but it's just a fact in the perception of the people that work here. Okay, so in effect, they're values that I believe in, but they're also the exact opposite of the people before me. which makes them way more powerful. Excuse me. All right. So values in your business, values in any organization are the key to accountability, because and we all know that you want to be accountable, that's how you're going to be successful, and not just you, but the people on your team. But if you don't have values that are clear and repeatable and understandable, what are you being held account to? You need to be held account to the values, to the job that you're doing, but to the values of the organization, which need to be, as again, simple, repeatable. Think of somewhere in the 3 to 5 range would be my experience on that. And accountability is the essence of teamwork, right? I mean, what is a team? A team is, I'm accountable to you. You're accountable to me. I'm accountable to you, right? Back and forth. That's how teams are built, is through accountability. Accountable to what? Accountable to the values. The essence of service to each other is through accountability, which is accountable to values. Okay. How do you do your HR review? You measure accountability. You comment on accountability. Accountable to what? Accountable to those values. The values are important. They're super persuasive. They help build teams. They help you run your business. That's what I wanted to get out of Maxime. I think it was a good interview. And for Max, it was the values that created the movement, which was a serious movement. More specifically, the values created his decision about vaccine passports. Again, not saying it was right or wrong. I'm just saying that that's how he arrived at this. And I'm focusing on the leadership piece. And it created the movement. It created the movement, and how did that work out for him? Well, not that good. He got 5% of the popular vote in the federal election. Now, his party is 2 years old. So if you look at the history of Canadian politics and you know, a party that's 2 years old, well, 5% of the vote is pretty damn good, but he didn't get anybody elected. It's an interesting case study, I think, in the power of brands being the other people, the other parties, and him fighting against that. And I think there's some other interesting points about this election and Maxime's position as it relates to leadership. But go back and watch the episode. By the way, speaking of that video has 15,000 views right now on our channel, which is pretty good. But I was trying to promote it. My team was trying to promote this video before the election so people could get a review and get a feel for who Maxime was. Completely blocked by Instagram, completely blocked by YouTube for sensitive content. You appeal it, you pay, you know, they take your money for the ad, and then you appeal the damn thing, and then they drag their feet. And I said to my staff, I said, I think the election was, I forget, like on a Monday or Tuesday morning, or no, a Monday, I guess. And I said, you watch Tuesday morning, our appeals will be accepted, which they were. So about half the viewership is post-election. So if you are a conservative and you think that that social media should just be at the whims of the free market and it shouldn't be broken up and regulated, you're out of your mind. You're just out of your mind. It's such a corrupt business. It needs to be dealt with. My little personal pet peeve. Let's move on to entrepreneurs and personality characteristics. I'm going to do a little reset here. Like Clubhouse, we're doing a live Martinis with Scott stream on YouTube. On Instagram, you're just watching in. Thank you for that. But if you have comments, you have something else you want me to talk about on either platform here, let me know. I hope the volume's coming through okay. I'm doing this from a location I've never recorded in before. And I'm doing it with my mobile setup, which isn't awesome. But if you got something you want me to talk about, want to say hi, please do so. And thank you, everybody, for joining us. This is Psychology of Entrepreneurs. So I was reading an article, and I feel terrible about this. I hate stealing people's contents. I lost the article. I don't know who the guy is that wrote it. He was in the US. He advises banks and lenders. And I would give him full credit. And I would give you his contact information, but I at this point I have no idea who it was. So I'm stealing his content. It's not mine. My comments on it are mine, but I would have liked to have given him proper reference. Anyways, this fellow surveyed a lot of literature about entrepreneurs and the characteristics of entrepreneurs, which he says is a field more widely researched than turnaround psychology, and some turnarounds being business turnarounds. How do you turn an organization around? And some of the key traits often referenced in entrepreneurial psychology are listed below. And he said there was 4 of them. So he listed out 4 traits in his article. If you're an entrepreneur, are you one of these traits? Let me know in the comments when you have a chance to get through this video. Number 1, aggressive risk taker. So this is an entrepreneur that is vigorously energetic, especially in the use of initiative and forcefulness, boldly assertive. Probably me. Is that you? So that's a typical characteristic of an entrepreneur. They have an optimistic outlook, tendency to expect the best possible outcome and dwell on the most hopeful aspects of a situation. I don't think that's me. I don't think that's me, but I do wake up every morning, and in my mantra for myself, I remind myself to view things positively. We've talked about that on the Martinis with Scott channel before, that one way to fight confirmation bias and your filter on the world, your frame of reference, is to remind yourself of that exists, and it impacts how you view every fact. Everything that you're looking at is impacted by your frame of reference, and negativity is a very strong frame of reference, and the only way to fight negativity is to be positive. Third characteristic, charismatic leader, resource aggregator. Personal quality attributed to leaders who arouse fervent, popular devotion and enthusiasm. I don't think that's me. And if it were, it's not for me to say. Strong self-efficacy, a measure of a person's belief that he or she can be successful when carrying out a particular task. 100% me. I jump into things without, evaluating all of the risk, perhaps. I mean, I have a general idea, but my true belief is that I'll figure it out. And I think entrepreneurs are like that. You jump into things just with this knowledge or this confidence that you can figure shit out, that you can move quickly and tactically and be effective. Okay. And so those are your 4 traits of entrepreneurs. Not that you have to be all 4, but that exist in entrepreneurs: aggressive risk taker, optimistic outlook, charismatic leader, and resource aggregator, strong self-efficacy. And then he says we should also look at some of the characteristics that entrepreneurs do not possess. And he lists out 3 of those. 1 is an ability to accurately self-assess. 2 is an ability to understand that adverse outcomes are possible. And 3 is an ability to base decisions on objective, detailed analysis. They go with their gut feel. Okay, so sure, that could be true about entrepreneurs. I don't know how you could have an optimistic outlook, but then think about things negatively at the same time. So it seems to me that these deficiencies in an entrepreneurial psychology are really just the opposite of the positives about an entrepreneurial psychology. But whatever. So then it goes on to say that we can generally then see entrepreneurs and not be surprised. And remember, his article is advising lenders. Getting a low battery warning on the Instagram, but we're okay here. So he's advising lenders. He's saying, you shouldn't be surprised that entrepreneurs are inclined to believe that the situation is not as bad as you're making it out to be. How many times have we talked about that on this show? That the entrepreneur is just following their gut instincts instead of data-based. That the entrepreneur is emotionally attached to their decisions and to the assets and individuals, and that they're opposed to external intervention in the company, and they respond emotionally if you tell them they're screwing up and doing things improperly and not being effective. I think all of those things are generally true. And then he talks about confirmation bias, which is the primary reason I like the article. We talk about confirmation bias all the time on the Martinis with Scott channel. Confirmation bias, again, the unconscious bias that results in the tendency so you make your decisions without having the facts. The human brain doesn't take about, hey, Jeff, welcome to I'm going to give you a wave. Welcome to the show. So again, if anybody has comments, they want me to talk about something, please let me know. anyways, confirmation bias. The human brain does not assess a bunch of facts and then make a decision. It makes a decision and then looks for facts that support that decision, or ignores facts that go against that decision, or manipulates, spins, rationalizes things to support its decision. That's what the human brain does. And and so the author of this article is recommending to lenders a bunch of things that they can do to fight these characteristics of entrepreneurs in the situation when things are going bad. And I'm here to tell you, none of these things are going to work. For example, write down the personality traits that you've observed in the participants, research each one, find a way to combat them, create a formal communication plan. I'm just going to skip through a bunch of these. Understand, anticipate how and when to discuss the nuclear option, which is basically, if you're a lender, pulling the line on the entrepreneur. Okay, none of that stuff is going to work. And that's where I get offside with this article. And I wanted to talk about it. And helpful to you is, I know some of you are lenders that listen to the show, but most of you are entrepreneurs or business owners. And think about this from your point of view. If you're called in front of the bank, or you're called from stakeholder and things are going wrong, what can you do about it? It's the same advice I would have to lenders. If you want to break through the confirmation bias, you have very few choices. You need to hire or fire. Okay, you got to find a bad guy. You got to change up your team, basically. Bad people that aren't performing, or bad people that you're not listening, that you just don't trust in, you need to get rid of them. You need to hire. You need to hire people that will help guide you. Create an advisory board. There's another option. If you know you have confirmation bias, then you know that you need to do something about it. You don't know that you're thinking about this thing with a confirmation bias filter, right? But you know that you think about everything with a confirmation bias filter, and things aren't going well. Okay, so therefore you need to bring in new blood, new points of view, and start listening to them. The onus is on the entrepreneur officers, interim executives, chief restructuring advisors, whatever the hell you want to call them. Bring in somebody new. This is a job that I do. I step in and I say to the entrepreneur, I say to the business owner, hey, you do what you like to do and what makes you money. I'll deal with the shit. I'll deal with the trouble, and we'll work together in a partnership. And that's been really, really effective. All right, where are we? 23 minutes in. It's going to be a short show today because I'm going to go and celebrate this victory that we've had today. And but I'm going to talk about offshore tax planning. I'm going to tell you not to do it in the end, but this is a bit of a dry topic. But I was reading an article. a couple of weeks ago in Canadian Business Magazine, and a magazine or a newspaper or something, I forget, where a Canadian businessman was wrapped up in a U.S. Criminal indictment for structuring and selling tax shelter products. If you're in the business world, you read about these problems all the time. And I just found it super interesting because I thought this sort of product was dead. I didn't know that businesses were off creating complicated structures to shelter tax. But I'm reading more and more about it. So the product seems to be alive. And I think it makes a ton of sense, as governments are looking to, are spending a ton more money and they're raising taxes, is going to create a segment of the population and of businesses that want to structure things in different tax jurisdictions, which is really what that is all about. And I find it interesting because in another life, sort of back in the 90s, I did a ton of this product. Did a lot of structuring for people. I never really did it for compensation. It wasn't my business, but I've just been involved in 27 countries, I think, in the last decade. Anyways, I've been working on deals, and so you just get into these international structures and international negotiations and corporate structures, organizational structures, and I've lived in a lot of different countries all over the world. And so it was always sort of part of my life in the 90s. And then I just got rid of it because it was turning into a bad business practice that you didn't want to be associated with. And so people come to me to this day and they say, hey, we want to structure offshore. How do we shelter this income? And what I tell them, if they're Canadian, if you're US, do not listen to this advice because it's different. But it's not hugely different. In Canada, at the end of the day, I don't care if you set up your own international business corporation for $3,000. I may be 20 years out of date on the monetary budget here, but I don't care if you set up your own IBC through a service, or you pay an accounting firm $500,000 or $1 million to have complicated trust structures. At the end of the day, it's always the same thing. You have to give your money to somebody else and you can't have influence over it. So you need to trust that other entity. That's the bottom line, okay? Whether it's a trust, whether it's an IBC, you're not in control of your cash. And if you can't accept that, then you can't be involved in offshore tax planning. All right, that's my advice to them. Why do, and you know, there's so many companies that just don't understand that, that just huge fundamental mind shift. And it just creates so many problems. I have been involved in so many turnarounds with companies that have an international tax structure that no one can manage and no one can understand at the company. You know, like this company that I'm sitting in right now has multiple companies around the world that I won't talk about, or the reasons why. There's been maybe something I can talk about without any disclosure problems is another business that I was involved in the 1990s in the sporting goods industry. And it just had multiple jurisdictions, all intended to take IP offshore, to be in different low tax jurisdictions, IP being intellectual property and, you know, royalties between the companies, and to minimize tax in the high tax jurisdictions, and to minimize profit in the high tax jurisdictions, and to maximize profit in the low tax jurisdictions. And it becomes so complicated and so fragmented because you can't be in control of your own funds, and you have so many different people involved that what happens is the whole company just falls apart. And I've seen so many troubled companies with these source structures. Now, I don't know what causation and the correlation is. You know, maybe I only see troubled companies, right? So maybe there's a bunch of really successful companies sheltering their tax, and I just see the troubled ones. And I just can tell you that these sorts of structures, if you're not making money, are a disaster. They're an absolute disaster. What are some of the advantages of having offshore tax structures? Well, obviously you're minimizing tax, but that's not the only reasons. And I was never in the tax business, but I loved offshore for other reasons. Litigation protection. I can't tell you how many times that has helped my clients. If you're able to structure things off and have assets upfront in different jurisdictions, and then something goes wrong in one jurisdiction, they don't get these assets over here. It's a huge benefit. Same thing, bankruptcy protection. So those assets are not part of that estate. Again, you can't do this in the middle of these problems, but if you can think ahead, you can protect things, right? You could, just like no different than being an entrepreneur, and before you set up your business and start incurring some debt, you put your house in your wife's name. If you're a guy, or if you're a girl, you put your house in your husband's name. You put it into the name of the spouse who has the least risky occupation, basically, to protect it. It's that sort of structuring up front. It used to be back in the day, and I think it still is, that if you wanted to trade stock securities on a publicly traded exchange in Canada, that non-residents could do that for free, whereas residents as Canadians could not do it for free. And so a lot of stock promotion, a lot of Bay Street stuff, a lot of House Street stuff was all done offshore because it was a tax-free. So they'd set it up that way. You can get interest-free loans as a Canadian business. So, sorry, not interest-free loans, but tax-free interest payments. So if you were lending money as a non-resident to a Canadian, the interest that you received was tax-free to entice non-residents to lend. So if you were a Canadian and you could set up an offshore structure and have this come back, I mean, none of that these days is proper, but I'm just telling you why people use these sorts of products. But here's the negative. And there's a lot. And assuming that you've done everything legally, by the way, if you're legal, you still have these negatives. Pain in the ass to administer. It's really difficult, if not impossible, to set up offshore banking these days, because Because if you're trying to skirt this mines and management issue and release control of your money, but still kind of have your bank account, well, that doesn't work. Okay. And in your tax returns, you need to disclose your offshore accounts. And so if you're not doing this completely legitimate, you're kind of screwed because of the banking side of this, and properly so. Again, I can't stress that enough. Here's another negative, is that you end up as a business focusing on structure rather than business. And if you're an entrepreneur, if you're setting up, if you hope to be worth $1 billion in the future and become a whale, you need to focus on your business. You can't be stupid about structure, but starting your business with tax planning in mind just never works. And lastly, again, even if this is totally legal, there's a moral issue with this. There's just a stench, a stink in today's society. In today's business world, it doesn't matter what you are, it doesn't matter how legit it is. If you have multiple jurisdictions that are really doing nothing but tax planning, you're not viewed well. Again, no matter how legal it is, you're not viewed well. You're not going to be able to attract investors without having a long discussion about that all the time. My advice to you is, you're starting a business, you're in a business, you're pissed off about the taxes that you're paying. Do everything you can domestically with your tax advisors to minimize your tax, but just stay away. Stay away from these international tax planning. It's not going to go well for you. There's lots of reasons not to do it. And that's my view on that topic. All right, that's all I have for you today. I know it's been a short show. Hey, the Flying Fokker is here. How you doing? Let me give you a wave. Thanks for joining. This has been a live stream of the Martinis with Scott show, episode, what did I say? 173, I think we are. Episode 173 on YouTube. Thank you so much. Join us next week, and we'll start talking about this acquisition of this company that I'm sitting in right now. That's been a long time coming together. Instagram, glad that you were able to join us for this rare live stream. Thanks, everyone. Signing off on Instagram first. And YouTube, thank you for joining us.